Alrighty, we're going to jump on here and we're going to do a little supply and demand lesson with CHCI. We all know stock market and the way prices move, the bottom line all revolves around supply and demand. If there is a demand there for the stock, prices go up. If there's more supply being brought back into the market, prices are going to go lower. So you see something like CHCI here. You can see clear support is right here at 750, we're going to say. It keeps bouncing off of that 750 up here to 775, almost $8. So while you're watching a stock like this, you want to watch and keep an eye on the tape. Every single time when it pops up, are you seeing people attack the ask? You want to have that demand there for the stock. If this stock just keeps coming down to support and you're seeing buying on the tape, which we've been seeing buying coming in across the tape. People are patiently waiting to get filled on the bid right here. That's not good. You don't want to see that. If people are patiently sitting and waiting to get filled, and the stock is just hanging out and lingering here at support, that's not good. Eventually, when everybody gets filled on the bid here, this is what's going to happen. Prices are going to fall right through down to the next level. There's no demand for the stock. I'll take that back, there's demand, but people are patiently waiting to get filled on the bid side. You want to see people attacking the stock, attacking when prices go up higher. That is the demand part. If people are chasing after a stock when prices go higher, that's that lightning bolt attacking the stock, and prices should go up higher. So now that it broke through this level here at 750, the next area it's going to fall down to is $7. And now 750 is going to be resistance. There's a lot of people out here in the stock market that like to use indicators and all types of other stuff. When they're using all these different kinds of indicators, they're really looking over the big picture. They really are. Everything revolves around supply and demand in the stock market. Everything. So when you're using something like RSI, let's pull up RSI real quick. Relative Strength Index. Let's add it to our chart. Some people mess around with the settings, but you can easily see it spikes up near 90, and when they say it's up near 90, it's overbought. When it comes back down to 50s, 30s, it's oversold. But the thing with RSI, it's hard to gauge if a stock is going to come right back up. Just because a stock is oversold doesn't necessarily mean it's got to bounce back up. I mean, look at CLOV for an example. This thing, extreme run up from $9 all the way up to $30, and it's been selling off all day. And it's been back and forth between 25 and 60 on this RSI here. I know I'm using it on a 1 minute time frame. Normally people use it on bigger time frames. I don't need an RSI to tell me when things are oversold and overbought, when I can just simply look at a chart. I can see it clearly ran up from $9 to $30. It's extremely overbought. Extremely. So just try to keep it to the basic supply and demand at the end of the day. You want to be keeping an eye on the tape. Is the tape telling you people are attacking the ask when a stock runs up to resistance? When it comes down to support, are you noticing people patiently waiting to get filled? Or are people slamming that bid, like hacking it down? So pay attention to supply, demand, read the tape. You don't really need to pay much attention to the level 2 anymore. Level 2 is absolute. It was popular in the 90s. Too many people can play games on it. You're going to see people flashing large size on the ask and on the bid and then when prices get to it, they'll just take it away. Too many games on the level 2. There really is. And if you've watched the level 2 in the past, you'll see them stacking on the ask. And when a stock comes up to the ask, it'll quickly eat through it and it make it look like it's going to break up higher. And then it just runs into a wall and you get met with a death candle. It's just not worth it. The day I took level 2 off of my radar and my charts and just paid attention to volume, price action, supply, demand, focused on psychological levels, whole dollar levels, every 25 cent, every 50 cent, every 75 cent, $1. Really try to keep it as simple as possible. That's when the consistency started to come in. And don't be afraid to look at multiple different time frames. I like to look at 1-minute charts, 3-minute charts, 10-minute charts. I'll even sometimes pull up 65-minute charts. I like 65-minute charts versus the 60-minute charts. It's just personal preference. When you do the math in a trading day, divide 60 into 6.5 hours, you're missing data. You divide 65 into 60, it works itself out. So you get an extra candle per day and an extra 5 candles per week. So just a quick lesson on supply and demand, guys.